Welcome, everyone, back to the Mortgage Heroes weekly podcast where we talk about how you can win in mortgage and real estate. Each week, we have a new topic to discuss and dig into. We share opinion, perspective, advice, and insight that helps bring forward the most important topics of the market to the table. I'm Andy Cruz here in Business Development and Mortgage Heroes. Today, I have with me
Will Flores with Mortgage Heroes.
And Brian Landeros, Mortgage Heroes. Let's go.
Let's go.
So, guys, we got through the first week of January. How was the first week of the new year?
Weeks, right?
Boy, oh, boy.
Okay, do tell.
We always make a New Year's resolution that, hey, everything's going to be like this, right? But you can never be too prepared. Would you agree?
100%.
Yeah.
Right? You can never be too prepared, right? But it was challenging, to say the least. But you know what? Where there's challenges, there's always growth.
Yeah.
So that's what we here at Mortgage Heroes do, is we make sure that we take on those challenges.
Yep.
And we just grow from them.
Yeah.
100%, man. Well, you couldn't have said it any better. This week was just jam-packed with excitement, to say the least, But like you said, you take the negative, turn it into a positive, and turn it into a learning experience. From this, we grow. And it's not the end of the world. And there's a lot more to accomplish.
Absolutely.
So.
And here it is, right? I don't see the negative things. It's the challenges. Actually, that was part of one of my goals, was I'm going to learn to accept challenges and embrace them, and then realize that that's what creates that growth. So,
100%.
There we go. That's how it was, Andy.
Well, I will tell you guys something that was great that happened the first week. Got really good feedback from the podcast show already.
Yes, nice.
Our
Thank
opening
you,
newsletter going out to everybody on our past client database had over 50% open rate on its first 48 hours. That is really good news for us in taking this new direction, if you will, with the show. It's also helpful that we have all three of us on at the same time. That's also useful. But already the feedback's good. We got on the Apple platform, Google platform.
What?
So time to go.
Who are you, Andy Bryan?
Nerds
Who
Unite.
did this, huh?
So we're going to actually talk about two topics today, guys. I know I gave you a couple of notes. I intentionally didn't tell you everything. I have some questions we're going to ask, and I want to have some open discussion about this. So our two main topics today, we're going to talk about the most recent data surrounding house prices, and then a new argument being made about, is the dream of home ownership dying? Or the way it's also being spun is the Home Ownership Society may have been a mistake.
Whoa.
So before you react to that, though, we're going to get into the data first. Let's talk about the data and house prices, and then we'll dig into the broader conversation about home ownership. Was it a mistake? And we'll argue politely about that. Okay. And maybe not at all, actually. I don't know. Maybe we won't argue. I think I'm going to be arguing with the authors. All right, there it is. House price.
Personal vendetta.
So let's talk about some house pricing stuff first, really quickly. San Diego days on the market has been increasing as of November of 2022. It looks like the days on the market is now 34, up from 32, coming up from 29, 28, 27. So there was a trough back in the spring in how short houses were on the market, and now they're on the market longer. Go. First impressions, why?
Jeez.
I want to say, honestly, because of interest rates and people not being able to afford higher purchase prices. So it's either they get in when they can, or they get squeezed out and have to wait till rates kind of trickle down a little bit and then try to get back in there. But I think that's been one of the biggest reasons why it's staying longer on the market.
Yeah, that is the reason, Brian. that is. So we've had it times where we have a client, right? And the income is pretty tight, especially with I also saw that the average home sales price in San Diego went up. It was $820. Now it's $869 and change, right? Yep. Even though we've seen a decline, we see that the
demand's still there.
It's exactly. So whenever we see even a 0.25% with people have tighter incomes, just a 0.25% could make a big difference.
Yeah,
100%. Absolutely.
And because we're so used to the 2.25% to 3%, on February of 2022, when the rates started going up, more like 4%, that's why we felt the brakes.
100%.
Yeah. We were thinking that the brakes were coming. Hey, everybody's kind of adjusting from the holidays.
Right.
It was a hard break.
Exactly. It was like it was a tough break because we're unused to it. So I really feel, Andy, in this case, my opinion has to be the rates.
Yeah, I think it was rates too. And then I think it's also a lagging indicator of rates because so many people in 2020 and 2021 got amazing rates in 2.25%, if they're VA, 2.5%, 3% fixed for 30 years. What is their incentive to move if they actually don't have a need to move? There isn't. But that means that there's just less inventory, longer days on market because money's more expensive, yada, yada. There's multiple variables in every situation.
Yeah.
What I'm seeing also here is we have a decline in inventory in not only condos, but also in single family residences. I think that is par for the course with what we're talking about right now.
Yes.
I'm definitely seeing it. But here's where I think there's a pivot for people. And I said this in Monday Mortgage Minute at the beginning of this week, and I was saying that this is where people can come back to the market for a second look or a third or a fourth look. If they were getting outbid multiple times in the last couple of years, this still may be their chance. The house they want may be on the market.
Correct.
I read something interesting the other day, and it said buying a house $50,000 under asking price at a 5% rate is a way better deal than buying a house $100,000 over asking price at a 3% rate.
Correct.
But people are still not ready to have that conversation.
I think that's hard. I think that's a hard one for people to kind of digest, just because the cost of the money is so high. But again, you're talking about renting versus owning, and would you rather pay $50,000 more for it or $50,000 less? If you only ask that question, most people would say, "I'll pay less for it."
Yeah.
Exactly.
Yeah, I mean, it's a crazy world out there right now, and coming through the holidays now, things seem to be a little kind of, the real estate market is usually during these times is fairly calm, you know? People are kind of regaining their confidence and going. But the biggest thing that I saw was 41% of people out there are predicting a crash, right? Thanks to our media.
Yeah.
Thanks to our media. And we already know what they like to sell on, right?
The other 59% are just being silent about it.
Correct. You know what I mean? But so that's what we hear out there. We do see actually the actions behind it. Things are pretty calm. People are learning to look at their paperwork much more now than it was when their rate was 2.25%.
Yeah.
Oh my God, let me sign away.
Yeah.
Now that we're seeing the 5.6, well, let's take a look at that.
A little
revisit
more
this.
discernment.
Absolutely. And fair enough. Those are the things you're supposed to do. This is the biggest
I think
purchase.
it's natural. I mean, if you see it, it's a good deal. You don't think about it. Why not?
Exactly.
Yeah, I mean, in the end, we're still talking about people needing a place to live, right? And then the choice is, do I want to live in a place that someone else owns, or am I going to live in a place that I'm going to own? That's not exactly the segue we're making yet, but we're getting there. But people are making those choices.
Yeah, and the good thing is people are still buying. People are still doing something, okay? The craziest thing that I saw guys come up was there's 1 million homes on the market nationwide. I don't understand. I don't see the data everywhere, right? But that's what I heard, and I'm like, that is just crazy.
Yeah, I think proportionately they're saying that that's low, but that's still, by volume, that's still a lot.
Yeah.
And given the market conditions that we have with the cost of money, less inventory, days in the market, it makes sense that there's 1 million still. Yeah. I think it would be actually worse if there was more like 500,000 or only 3/4. That would actually be even worse. Yeah. That would make prices stay even higher for longer, probably. Yeah. Despite the cost of money. So.
Yeah. So there you go, Feds. Just reduce the rates, please.
Jesus well, let's talk about San Diego median home price really quick. It looks like it's been flattening out. It did have a rise, of course, through 2021, where median home price was being driven up. Again, low cost of money helps be able to drive higher price. People overbidding, overpaying, lots of other bidders, people stepping on all over each other to try to get homes. Yeah. That's flattening out. That's also a lagging indicator as well, where we start to see that number slow down. It's not declining necessarily, but it has declined to a little trough that's stabilized. Correct. I think we're going to see that probably for the rest of the year, depending on the rate situation. Yeah. But I just wanted to bring that up for everyone listening here in San Diego. It is flattened, and it will probably remain that way because I don't think we're foretelling a crash, number one. No crash happening on the horizon. There may be a correction in some places, but not all places are equal.
But according to social media real estate experts,
everything's a bubble everywhere all the time.
It's all going to crash. It's horrible. Don't believe it.
And here's why I'm saying that is because also the current median price change has also flattened. Yeah. So the price change has been in the positive territory month after month after month after month.
Crazy.
And it's flattened. It has not declined yet.
Yeah.
If you see a median home price go to the negative side, then of course, okay, we'll talk about some more correction in general. But again, Del Mar is different than Jamul, and Del Zura is different than Bonita. Yeah. So not all things equal.
Who's ready for Del Mar?
One of the questions I wanted to ask was, so before the COVID happened, right? All the prices were similarly to what they're coming down now too. But during COVID, because of everything that happened, the demand, I believe that it created artificial home prices, meaning that it got spiked up because of the low rates, because of people wanting to buy. And now that it's coming down, I don't think it's crashing, but it's just coming back down to what's normal.
Correct.
Well, it's distorted in both directions because, for example, I know people that moved out to Alpine, Ramona, and those areas, and they were willing to spend the money because they wanted to get out of the city and have more space on their own. Well, okay, but those places now that have had a high increase of home price appreciation really quickly are also having them decelerate quickly as well. 10, 15, 20% home price listing price changes to the downside because now the appetite isn't there.
Yeah,
100%.
Yeah, and if you're a seller and you need to make your moves, well, you have to make them. You have to do whatever 100%. It takes to make sure that you're moving forward in the direction where you want to be.
I mean, even like ranches we were looking at in the spring, they're down 10%, sometimes 15%. A couple of them.
Not everybody wants to.
No, but we drove out there. We were looking at some places and like, okay, well here's $1.25 million. Oh, it sold for $1 million. Oh, this one's $1.7 million. It went for 1.3. Wow. Like that's a big change. So. Okay, let's move on to some economic stuff, guys. Pending home sales crashed to second lowest monthly reading in 20 years. Hold on a second. I thought we just said there wasn't a crash. Massive.
You're using the C word?
Neck-breaking transition. Pending home sales crashed to second lowest. Now, this is a national reading from NAR, so National Association of Realtors. Pending home sales are down another 4% from October, according to National Association of Realtors. Now, them being down is, again, across all of the country.
Of course.
Yeah. So it's hard to localize this when we're in a big market, if we're in real estate. So what do you guys think is going to happen next based on what you're seeing happen now? Nationally. Let's go nationally. What do you think is going to happen?
Nationally, I believe we're still going to be correcting. The market's still going to correct into 2023. We're going to see prices, stabilize. I wouldn't say crash. Some markets will crash. I mean, dip more than others. But in the grand scheme of everything, I believe that prices will stabilize. Rates won't go too high, but I believe they're going to stay, at a stable place for everybody to be able to, make a move. But I don't foresee anything crashing.
Mm-hmm. Yeah.
I just don't.
Yeah, I'm with you. It's just going to be stabilized, and here it is. When we don't have a lot of supply, guess what? People still need homes. There's still other people that are in different industries, et cetera, that, they're going to still have an appetite to buy. And this is their time to actually not be competing with everyone else.
And that's exactly to your point. I believe a buyer's market is going to be the best chance for a buyer to be able to get into the house under their terms, opposed to what we saw these previous years where it's like, if you're not naming your first child after me, then you can't get in the house and 100,000 above.
Here's why I think we're going to go ahead and see that price kind of hold where you guys are talking about now is inventory. Yeah. Inventory is low across the board. So we talk about inventory in San Diego. Okay, you maximize that. You look at inventory nationally. Well, when inventory is down across the board, that means prices have a better chance of stabilizing.
Correct.
So I think it's going to be a muted response, honestly. And I think a lot of that has to do with the Fed and the stuff they're doing in order to move the levers of monetary policy and economics.
Yeah. And the reason, again, it's because of supply. Back in 2012, people have the misconception that we're experiencing the same. We're not.
Right.
Very different times.
Totally different.
It's a different market. Back then, we had a ton of supply.
Yes.
So therefore, homes dropped they dropped the way interest rates increased this time around last year, which is the fastest. Yep. That's the decline that we saw back in the mortgage meltdown was because there were so many homes. And then the banks didn't understand about, well, let's do some type of modification. They were just quick to foreclose and let's go. There was a lot of, that's why the housing market dipped so fast.
Yeah. And part of that boom was developers played the game. They were like, we need a glut of homes. Let's just build a lot of homes. So there was like this demand for it. And in order to put more people into more homes, you had to reduce the standards by which they could enter, which is why we had all these exotic loans, which then caused some of the problem.
Correct.
So it's like this, it's always these moving function of variables that cause supply or demand issues, constraints, or levity.
I mean, and guys, we're here in East, like Chula Vista, right? Yeah. We saw how fast the growth was. I purchased my first home here in 2000. By 2007-8, my good, everything was done. It felt like if you guys watched the Truman Show with Jim Carrey, it felt like that. Like we have in our own bubble. We don't have to go anywhere. Everything's here, right? Like I was in a movie.
Am I too young for that show?
Probably. Hey, I'm over here like. Yeah, probably. We don't know.
Watching like A&E classics for millennials.
Yeah. But if you notice now from 2010-12, the growth hasn't been slowed that fast.
Yeah, it's slowed a lot.
Well, you're so right. Yeah.
It really, I feel like developers just, I don't want to lose the way we lost over there. That was not a good time to be in the developing business, right?
And there's another problem too, which is the idea of the entry-level home has completely changed in the last 10 or 15 years, partly because of 2008 and 9 and all that. Yeah. So you have to have developers willing to play ball. You have to have cities on board to release land in order to build. And then you have to have banks on board to let money be there, and then borrowers who even want them.
Yeah.
So... that actually is a good pivot, guys. Wow, we landed.
We landed.
Here we are. That's a great
And then
pivot.
speaking of land, who's purchasing all that land?
Bill Gates.
That one guy.
Mr. Gates, that one guy,
The computer guy?
Hey, you set some notes up. Yeah. Here we go.
Here we go. Okay, next.
We got 2 topics.
Okay, so let's talk about this. Let's talk about the dream of home ownership dying. I'm seeing more and more articles come out from major... news organizations that are very well read and promoted on the regular basis about the dream of home ownership dying, and maybe that the idea of the home ownership society was a bad approach.
Whoa.
So, I want to get your opinion first, guys. Whoa. Why do you think that there would be that argument in this day and age? Why would someone say that, knowing what we know on the inside of the business? What would incline someone to dissuade people from owning a home?
The first thing that came to my mind, the person who wrote the article doesn't own a home.
That's possible.
I don't know. I don't know.
That, or they had a really bad experience. Maybe they, foreclosed on a property. Maybe they said buying's not for them, or they just went through a really hard time, but probably don't own a home.
Andy, it really depends, right? In the area, it's hard to pinpoint why that would be the case. Yeah. Obviously, if you're in a big metropolitan city like San Diego, San Francisco, people who bought, like myself, back in 2000, even 13. Yeah. It's a proven statistic that people who buy a home are better likely to retire in a better position than the one that didn't. Yeah. Because we can leverage these properties. Yeah. I see that I would have either spent my money renting and I had nothing to show for, or I was lucky enough to have purchased my recent home in 2013 where I have a lot to show for. Yep. So I just think everybody's experience is going to be very different. For me, I encourage people, you're in San Diego, you have to buy. I don't care where you're at. Invest in yourself. Yep. So I think that is just right now, the rates are.
And I think that's because that's your argument and your position stands the course of time over decades, not like 24 months or 36 months. I think that's part of what gets misconstrued in these arguments. And
correct.
We'll get into some of the details of that, but I think that's one of the things. You just tripped right on it, though. Yeah. It's like people misconstrue, a house is only an investment. It's like, well, you're going to live in it. So I don't live in any of my other investments. I don't live in my 401k. I don't live in my IRA. I don't live in my life insurance policy, et cetera, et cetera.
Yes,
so
I
there
agree.
you go.
So I actually wanted to say, so I believe that the reason why they're saying this is because a lot of people don't know, what it takes to buy a house. And I've had a client that cried when we closed because she didn't know anything about buying a house or how to do it. So I feel that fear, and that's what we know news channels, the media does, feeds on fear. And when the market is being talked about crashing, talk about it's dipping, or it's the worst market we've seen. Well, it's so easy to come up with stuff like this to just kind of feed into to the fear that they're trying to put out there. But I just feel that it's a lack of information and it's a lack of knowledge that makes people not know what they want to do, because obviously you don't know what you don't know.
And that's why we're having these discussions, right?
And that's exactly why we have these podcasts, to break it down.
So let's talk through a couple of these things I bullet pointed from this article. The Home Ownership Society was a mistake. So right out the gate, guys, here's one thing I highlighted. Home ownership is a guarantee against a lost job, against rising rents, against a medical emergency. Who promises this, by the way?
Whoa.
So who promises that home ownership, I'm just asking you guys,
that's crazy.
Who promises that home ownership is a guarantee against a lost job?
So are they saying that if you have a house, you're more susceptible to losing your job or not having money?
I just think what I'm hearing from that is, if you own a home, it's harder for you to get out of that situation. If you get yourself caught in a bind and you use your job, now I have more to worry about and I have this home to take care of, where if you're rent, well, I don't know where you would go.
But that's exactly what I'm saying.
I would say it's the same thing.
I mean, at least if you own, you got a few months until you foreclose and you go through that process. But if you're a renter, depending on what state you are,
Yeah.
You might just get like kicked out the next month.
So let me ask you another question. If home ownership is supposed to guarantee a loss against your job, if you do lose your job, are you allowed to refinance to access the cash in your house?
Of course not.
Oh,
definitely not.
Gee,
Of course
that's very
not.
interesting.
Yeah.
I think it was overlooked here in this article.
Yeah.
Wink,
yeah.
wink.
Yeah,
Super
of
hard
course
wink,
not.
wink.
Hello.
Okay, let's move on to the next thing. The consensus that homeownership is preferable to renting obscures quite a few rotten truths about when homeownership doesn't work out, about whom it doesn't work out for, and that its gains for some are predicated on losses for others. So does the gain of homeownership require a loss for someone else?
Nah. Well,
I don't
Does
believe so.
someone have to lose in order for someone to win?
No.
I think that's a point of view and an
course not.
opinion because it goes back to, I mean, if you know when you can make the right move or you make the right investment, I mean, if everybody's happy and in the deal, everybody makes money, then who's really losing if everybody agreed?
exactly.
Okay, so let's flip that really quickly because it's not mentioned here, but let's say you're a landlord and you own 100 rentals.
Okay.
Does someone have to lose in order for you to win?
No.
Okay. All right. No, it's okay. I'm not trying to ask an obvious question.
no,
it was just like,
I'm just
no,
asking the question.
no.
Like,
No, this is Patrick.
Yeah.
it's hypothesized this way. So I was like, okay,
I love that article already. I'm telling you. Jeez. No.
Ask it from a different angle and see if the opinion changes.
I will still know.
No.
Homeownership doesn't even consistently deliver on the core promise of providing financial security.
Jesus.
Have you ever
No.
been told that homeownership provides a promise of financial security?
Andy, no means no. Okay.
And over to Bryant. No, it doesn't.
Okay.
No.
Yeah.
All right. So wealth building through homeownership requires selling at the right time. Can renters sell?
No.
Can homeowners sell?
Yes.
course.
Yes.
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 There's a yes there.
Yes.
Okay. Next one. Let's continue. Homeownership works for some because it cannot work for all. So here's my question.
I agree with that.
That's true, and I have a reason. I have a technical reason.
Uh-huh.
So here's what I'm going to ask you: so how do you explain people who could not qualify then work themselves into a position of qualification?
Is there a multiple choice in this, Andy?
Well,
Or is there a little like box where I could like say?
The statement is homeownership works for some because it can't work for all. So it only works for some
Yeah.
people because it just doesn't work for all. So
Correct.
how do you explain then people that understand the qualification process and then make their own personal decision to make their credit better, fix their monthly debts, or put
Yeah.
themselves in a position where they do qualify? How would you explain that?
I think that's what you should do. If you don't know, you got to go and do the research. And I feel that's one of the most important things right now. Doing so much research that you understand what you have going on in your financials, in your life,
Yep.
and in your budget, so that you understand what your goals are and what measures you need to take in order to take action and make those happen. So I love that. If you're going to go out and research, like you have so many tools
Correct.
opposed to years before, let's say 10 years, 20 years back, you only went based off the people you trusted, right?
Yeah.
Now it's almost like if you're not doing the research and you're not going out there and like self-teaching yourself, then you're kind of doing yourself a disservice.
All the information's out there.
Like
There's
you really
apps.
you have
Nerd
YouTube,
Wallet.
you have Google, you have Andy.
No, not Google. God.
Yeah, there's apps. I'm not sponsoring Nerd Wallet or anything like that. I have no affiliation, okay,
But
whatsoever.
if down the line you guys want to throw us a little,
I'm just saying, right? Like those are things you can do. The little things, the little apps that just help you put your finances in place. Because this is the time to prepare.
And now with social media, you can get it to so many different groups,
Yes.
right? So many different masterminds. And it's like, if you're not taking the time to research what you don't know, you're never going to do it. And no one's going to come and tell you, hey, this is how you do it, and hold your hand till you get it done.
Well, one of my technical responses to that was we have underwriting guidelines for a reason. Going back to you bringing up 2008, 2009, all these developers building homes and us lowering the barrier for entry, that also caused problems.
Yes.
So there's like a balance and a fine line between where opportunity lies and what line you have to cross to get that.
Yeah.
So the idea that it works for some is true because it can only work for some. It does not work for all. And it doesn't work for all the time.
Yeah, and the guidelines are there to protect the consumer. Make sure that we're setting them up, for success.
Yeah.
Whereas back in 2008, it was a heartbeat, and you got a job, a credit, and that's it. No, I'm sorry.
Fog a mirror,
no.
sign
You
here.
didn't have to have a job because it was a ninja loan. They call no income, no job. Assets.
No assets.
Like really, you put your name, your credit score, you're ready to go, right? Like that's how you
Sign
get
me
it.
up. I'll take 3.
Or 10.
Yeah. Have you
How
seen
much
The
do you
Big
want?
Short?
Yeah. She's like, this house, I have sold it like 7 times. Yeah, I own a condo and then 3 more.
Yeah.
Nah, I never seen that movie.
And was it bad? was it bad if you leveraged it right?
Well, that goes to the point that I was saying. I mean, if you're aware of what you're doing and you have the right plan, then your risk is going to be way lower than someone that's just trying to throw it at the wall and hope that it sticks, right?
This is the other thing that occurred, right? Not only supply back the difference in the mortgage meltdown, but also the credit rating of everything.
Yes, sir.
Of how you're obtaining credit.
Yep.
It was so lenient.
Yeah.
Again, you had a ninja loan. It was literally called the ninja, right? Mm-hmm. And now everything's still full documentation. So crash, if we're going to go for the crash and all that, kind of. Sorry, I
you use the C word?
No, you're good. No, you're right, because I think that's one of the things that's kind of upholding everything is the underwriting guidelines that changed since then require the line in the sand is a lot harder to cross these days. And so that's one of the things that's not even brought up in this very long article, which is credit requirements and people's ability to earn and maintain credit, which is on themselves. Just as much as someone has a 580, someone with a 720, it's the person's behavior that predicates the score, but we don't talk about that in this article. Mm-hmm. That's one of the main issues that goes unaddressed. But let's continue. I'm gonna skip over here because a couple things I wanted to lastly bring up. So. Borrowing against home equity is the domain of homeowners in relatively poor financial positions. They found that, this is a study they're citing, they found that almost 40% of total defaults from 2006 to 2008 were from 1997 homeowners who borrowed aggressively against the rising value of the houses. True or not true? Believable, not believable?
I mean... It's
so diluted. Okay,
that's fine.
There's sometimes you want to keep up with the Joneses, so you just have this line of credit. You figure, let me go buy a car, right? And so if I'm going to borrow a line of credit, my car payment is going to be $1,000. But, the car payment is going to be $1,000, but my line of credit's only $300. Well, I'll pay the car off with that. And so
eventually, Brian, when you were a kid, we used to have a different acronym for the HELOC. Instead of the home equity line of credit, it was called the Hummer equity line of credit. Yeah. So people would take money out of the house and then go buy an H2. So if you saw someone in your neighbors with a brand new H2, you're like, oh, they just got a HELOC.
Oh, they just had a HELOC. Humlock.
Yeah. So this is definitely possible, but what's funny about the time frame is that what is it about 1997 homeowners 10 years later doing this? It wasn't just that.
Well, that's a hard comparison.
So much other stuff that happened.
I just feel like they try to look for some statistic that fit their argument.
Correct.
And they're like, look back 3 years, 1997 was a year. Let's go. That's the one we're using.
Yeah.
But no, absolutely. It just depends what you're using it for.
Skip over the .com bust and 9/11, all those things. And
no, that doesn't matter. Just to be from 1997, we're the one that...
all right, I'm going to skip that other thing. It was basically,
and I think they bring those things up because those are things that's happening right now.
Sure. Yeah.
I mean, a lot of lines of credit. People don't want to refinance their 2 1/4s, right? So they figure how do I get a line of credit? Okay, great. So,
but the mechanics are different. It's like comparing a 1970s Ford Pinto to a 1999 Ford truck.
Absolutely.
A lot's changed. Oh, they all both have 4 wheels.
What's a Ford Pinto?
But, they used to blow up when they got in accidents. You know that.
Hit them from the behind.
When you got hit from behind a Ford Pinto, it would catch fire.
Not pinto beans?
Yeah. So anyways, the point is similar in this industry. It's like things have changed even though homes are homes, borrowing is borrowing, credit is credit, loans are loans. Well, the conditions for which the loans have been made now are different than they were then.
Correct.
So I think that has to be considered. Yeah. Okay. Last thing is, there is a concerted effort in this article to, advocate on behalf of low and middle income families and people by also helping to fix renting, which I think is helpful, except it's mentioned in one sentence at the very end of the article. And other than that, there's almost zero solutions to the problem that's being argued about. And one of the suggestions, it's not a solution necessarily, but one of the suggestions was building tons of new housing. Now, we already did that before. And so if you, on one hand of the conversation, are going to say that builders are colluding with banks, which are colluding with cities, which are colluding with developers, or people in the mortgage, real estate, and construction industry, the other advocacy here is, well, to build new homes, you also now need those people. Yeah. So you can't have it both ways. What do you think? Burger King. What do you think would help provide some more entry level housing for people?
So. For low income, usually, not trying to offend anyone, I feel like you don't have as much resources. So you don't have access to information. Therefore, it's tough for you.
But you just told us we all have access to information.
Yeah.
But
what do you mean? You mean help? Like someone like you?
So what I mean, I guess, is that if you're in that position, sometimes you feel like you can't get out. But at the same time, you get conformed to what your environment is. So therefore, nobody else is buying in my family. Nobody else is buying in my group. So it's like, well, why should I? Mm-hmm. So therefore, it never got passed down to you like good habits, when you were getting raised. So I believe that by default, they just get
it's a new world. It's a new world, and to your point, I also do want to defend that the resources. I know we have them out there, but it's lower income, and it's called lower income because some of these people don't even have a computer. The only time they'll use a computer will be at school if they're provided. So, I mean, there's nonprofits out there that are contributing to these things. So it just really depends, and you're absolutely right. Like, hey, I know my mom didn't want me to buy a house. Back in the day, she was like against it, right? And I'm like, oh my God, hadn't I done what I did, I wouldn't be in the positions that I'm in now. Yeah. And that's why I encourage people to, And
it's like, the mindset that you're around, if it's a scarcity mindset and they're saying don't buy a house because what happened in 2008, it could happen to you.
Yeah.
Well, then that's already kind of putting, a bad taste in your mouth.
Yeah.
And then don't go get a credit card.
Yeah.
Credit cards are bad for you.
Yeah.
But it's because you don't know how to leverage them and use them in the correct way. And I mean, some of the most successful people in this world use debt as a tool to gain.
What I feel we really need to do is stop getting all these big investors coming in and buying all our homes.
That I do believe is one of the
We
solutions.
need to stop that. Canada just announced
No more.
We're not going to let investors, be the owners of our country.
International investors.
International investors. Like, we want a true homeowner to come in and buy a home and plant their flag and take advantage of our country here as our land,
and
right?
I think that same argument or that same sentiment is being echoed here. I'm starting to talk to a lot more people who are like, hey, I'm having a more local focus more frequently, and I want to own places I can drive to. Like, I have a friend who literally will only buy places that he can drive to within the sun up to sundown and back home, which means that limits his radius to which he's going to own real estate. There's another person in town I know who she has 4. Every single place she owns is within 15 miles. Yeah. Like, that's her radius. And so I think that's part of what's going to help is there being affordable options for people to like start in renting, assume some responsibility, but then get their financial life shored up and prepared to qualify for home ownership. That might mean a condo. That might mean a townhome. That might mean you might be living in a duplex or a triplex or a quad for a little bit, and then you move your way through the system in leveraging up as it permits. And when you have a long time to do that, if you start in your 20s, you have your entire life to work your way through to the retirement like you're talking about.
Yeah. You have to. But absolutely. We just got to change certain things around. I'm telling you, if this continues, investors continue. You already saw with the Zillows, the Redfin, all them.
Oh yeah,
they helped increase the value of the homes. They're the ones that
whole different conversation.
Exactly. You see what I'm saying?
Stay tuned for next week.
But that's where we're going with all of this. That's the effect that these big iBuying companies do have. In our country. And luckily things are happening the way they're happening, and they're noticing like, hey, we may be in the wrong industry here. So believe me, right now people should be owning homes because it's going to be just a renter's market. It's
moving more and more towards that, especially as big players come in with big money, or they're sitting on a lot of cash in order to buy places.
So we're going back to low income. How are they going to afford it?
Well, that's the other
how is that going to become? And going to that, there's just so many moving parts that are just not gonna allow for that.
Yeah, because it becomes a little bit of a catch-22. Because if the qualification standards aren't there to meet for home ownership, then you're relegated to being a renter. But when rental rates are out of your control, and you are subject to all of the same external environmental risks that someone who's a homeowner next door has, it becomes like the lesser of two evils, if you will. Because I got to have a roof over my head, so I'm either going to buy and risk those things, or rent and then risk these things, and also lose out on the upside of potentially owning.
So, you guys saw my demeanor change right away, right? I'm like, no,
you gotta buy.
I love my people.
Yeah.
I love my people, man. I want to see them succeed. And that's my whole goal. And again, this is why we're doing what we're doing now.
And that's, I feel like, one of the most important things is having your local experts or people that are in your micro market actually giving you the tools and the information to be able to succeed, not just in real estate, but in your market. Because you can read the articles and they're national, right? But what's really happening in San Diego, Chula Vista, Eastlake, or whatever area you're going to buy in, I feel you need to be as connected to the people there that know how things are moving, so that you understand how the market performs for you and how that can, put you in a better position.
It's very true.
That's good. And that's why, even at the very intro of the show, it's like we are doing this so we can help you win in mortgage and real estate in 2023.
100%.
I talk about that a lot in Monday Mortgage Minute. I talk a lot about that in social media because that is the purpose. We can't share in any win if you're not involved in the win.
100%.
So we only win when you win. And that is why we have these conversations. So I'm hoping also that through this conversation, maybe this will spark some conversation with our audience.
Yeah.
People will ask some questions, leave some comments, or reach out to you guys to ask questions about how they can accelerate their process into homeownership. So, you have any final thoughts before we wrap up for today, guys?
No, I mean, hey, again, this is why we do what we're doing is to bring that knowledge, to bring this experience that we've had. We've been through a market crash. I've been there, fortunately and unfortunately, right? I had wins. I had a lot of losses. Yeah. And I think a lot of us had a lot of losses. So just going with this experience and knowledge that I've gained from those losses, and now putting myself in a position of gains, that's all I want to share now. How do we give this back? How do we set up people for success and give them the proper information and make them aware that we're paying attention to what's going on? We want to make sure that you're not tripping over these tripping hazards. We've already done all our due diligence, just to put that information out there.
Yep.
And for me, this is my first time going through this market shift or, this different of a change of economy like this compared to 2008. I mean, I was still a kid.
Still are.
But I'm fortunate enough to have Andy that, give me the outlook and, what to predict and what to expect throughout these, these waters. And I feel that's the most important thing, having some sort of like guide where you could see the light at the end of the tunnel and know like, okay, well, this is happening, but I know that if I listen to this, if I do this, prepare like that, we'll be all right.
Yep, of course.
Yeah. All right, guys. Well, thank you again for another great conversation this week. We will be back again next week. And thank you all for listening to the Mortgage Heroes Weekly Podcast. If you need help, you can reach out to us online at mortgageheroes.com, Facebook, Instagram, YouTube, email, phone, text, pigeon carrier.
Smoke signals.
Smoke signal. That's right. Remember to share this show with the people that you care about. We really sincerely appreciate you. Thanks for watching, and we'll see you again next week.
See you guys.
Thank you, guys.